India and Canada have a long history of bilateral relations based on shared values of democracy, pluralism, and strong interpersonal connections. Canada is home to one of the largest communities of Indian origin, with approximately 4% of Canadians being of Indian heritage, 1.4 million people. The deep cultural and political ties between India and Canada are strengthened by a growing network of official dialogues, agreements, and working groups on various issues of mutual interest. However, despite the potential for greater economic cooperation, the trade and investment relationship between India and Canada remains modest. In 2020, India was Canada's 14th largest export market and 13th largest trading partner overall. Two-way merchandise trade between Canada and India was $10.1 billion in 2019. However, due primarily to the COVID-19 pandemic, two-way trade decreased to $8.7 billion in 2020. India's economy offers tremendous opportunities for Canadian companies in emerging sectors such as transportation infrastructure, life science, clean energy technology, and renewable energy, as well as in traditional sectors such as infrastructure development, natural resources, defense and security, value-added food products, mining, and oil and gas. Science and technology collaboration, innovation, and educational linkages are also important areas of opportunity for Canadian business. To realize the full potential of the economic partnership between India and Canada, both countries have been working toward a comprehensive economic partnership agreement, (CEPA), since 2010. A CEPA is a free trade agreement that covers not only trade in goods, but also trade in services, investment, government procurement, and other areas of economic cooperation. A CEPA would provide preferential market access for Canadian and Indian exporters and investors, reduce or eliminate tariffs and non-tariff barriers, enhance regulatory transparency and predictability, promote labor mobility and mutual recognition of professional qualifications, and facilitate greater participation of small and medium enterprises, SMEs, in bilateral trade. A CEPA would also complement the ongoing negotiations on a Foreign Investment Promotion Protection Agreement, (FIPA), between India and Canada. A FIPA is a bilateral treaty that establishes rules for foreign investors and investments in each country. A FIPA would provide a more stable and secure environment for Canadian investors in India by ensuring non-discriminatory treatment, protection from expropriation without adequate compensation, free transfer of funds related to investments, and access to international arbitration for dispute settlement. According to a joint study conducted by both governments in 2010, a CEPA could boost Canada's GDP by at least $6 billion and increase bilateral trade by 50%. Similarly, a FIPA could increase bilateral investment flows by up to $15 billion over a decade. These agreements would create thousands of jobs and benefit various sectors of both economies. The negotiations on a CEPA and a FIPA have faced some challenges and delays over the years due to differences in expectations, priorities, and sensitivities of both parties. However, there has been renewed momentum and commitment to advance the talks since last year, when both countries decided to relaunch the negotiations amid the COVID-19 pandemic. Both countries have held several rounds of discussions at the ministerial and official levels to explore ways to deepen the commercial relationship. India is a high-priority trading partner for Canada and a key partner, as Canada strengthens its economic links to the Indo-Pacific under a new comprehensive strategy for the region. The successful conclusion of a CEPA and a FIPA would mark a historic milestone in the India-Canada trade relations. It would also reflect the shared vision of both countries to foster a more prosperous, inclusive, and sustainable future for their people. One of the most important outcomes of the 6th Canada-India Ministerial Dialogue on Trade and Investment held in Ottawa on May 8, 2023 was the announcement of the India-Canada Early Progress Trade Agreement, EPTA. This agreement is a transitional step towards a comprehensive economic partnership agreement, CEPA, between the two countries, which has been under negotiation since 2010. The EPTA aims to cover high-level commitments in goods, services, investment, rules of origin, technical barriers to trade, and dispute settlement. The main features and benefits of the EPTA are It will boost bilateral trade and investment by reducing tariffs and non-tariff barriers, enhancing market access, and providing a stable and predictable regulatory environment for businesses. It will foster cooperation and partnerships in sectors where both countries have complementary strengths and interests, such as agricultural goods, chemicals, green technologies, infrastructure, automotive, clean energy, electronics, minerals and metals. It will promote innovation and entrepreneurship by facilitating collaboration in science, technology and innovation, supporting startups and innovation partnerships, and encouraging business-to-business engagement on critical minerals. It will strengthen the strategic partnership between Canada and India in the Indo-Pacific region by aligning their trade and economic interests with their shared values of democracy, human rights, rule of law, and multilateralism. It will contribute to the global economic recovery from the COVID-19 pandemic and the war in Ukraine by enhancing resilience and diversification of supply chains, supporting sustainable development goals, and addressing climate change challenges. The EPTA is expected to be finalized by the end of 2023, paving the way for a more ambitious and comprehensive CEPA that will further deepen the economic ties between Canada and India. The EPTA is a testament to the strong commitment and vision of both countries to enhance their trade and economic relationship for mutual benefit and prosperity.